What's going on, guys? Welcome back for another episode here of Let It Grow Investing. We're creeping up to 338, 340, something like that. Thank you guys for being here. We've got a lot to get covered, a lot of changes in the market, and a lot that still remains the same. So we're trying to figure it all out. We're trying to see where we go from here. And that's what we are always about when it comes to investing, when it comes to what to do with our portfolios. We're always looking for what's next. Well, we've had a massive run, right? We talked about that last time. We were looking at the NASDAQ creeping back up to highs, the S&P over 7,000. And a week later, we are still basically in the same spot, right? We're looking at a lot of the similar stuff. But we did have a couple changes, right? So if you guys were tuned into the market this week, you had to be aware that Intel is just going through the roof. And this isn't one that I'm really hard pressed about. It seemed like they couldn't get out of their way for a long while there. A couple other, AMD was kind of eating their lunch, and I'm still bigger on AMD. We have some Intel INTC in the investing challenge portfolio. I think we bought it 2 or 3 times. And so it's been on the radar. We've talked about it, but not as much as some other names. So let's get caught up. Let's see what's going on. Let's see a little bit about what they said, and let's go from here. Right, we're looking at Intel right now, 82.54, up 23% on Friday, and this comes from a lot of news that their CPU segment. There's a lot of demand for it. There's a lot of demand for CPUs with AI built in, and whatever capability that is. I'm not a computer programmer or engineer or anything else, but that's what they're telling me, and that's what the market's hearing. That's where we're at, right? So you're seeing this massive rise. We were down at $40, $42 maybe, on March 28th, right? So we're looking at a stock that ran up about $40 in a month. It doubled in a month. And yeah, I mean, it was kind of talked about, but not really anything that anyone was really leaning into because they had been doing so poor for so long. If we pull up a longer term chart, we'll see just how they were doing. We got a 3-year here. If we look back, we were there, probably 2 years ago. And then we dropped and we stayed in the $20 to $30 range for the best part of a year and a half. And we kind of peaked out a little bit. We saw a little bit of a breakout here. Then we kind of came back down, and then we were just to the moon, right? So there's a lot of demand for CPUs. That is what this is showing us. That is why the market is going crazy. And if you think about the computer cycle, it tends to make sense, right? We're looking at everyone bought computers, built out their office, their home office in 2020. That was the talk of the town, and we couldn't get enough of it. But then everything slowed back down. We were back to work. Yeah, some people updated some office space. Some people still worked remote. Some people are still working remote, but that cycle is normally, 5 to 8 years where people are getting new computers. So there's more and more demand. There's also more and more demand because people want what's next, right? AI is next, and people are buying these computers, new CPUs with AI enabled. So Intel, immediate benefactor. We were talking about AMD on the GPU side, NVIDIA on the GPU side, and that is still a trend as well. There is still so much demand for that, but there is also now this demand for CPUs, and AMD is going to be in the crosshairs of both of those. So I'm still bullish, very bullish on AMD, but we got to figure out what we want to do from here, right? I mean, if you bought into Intel down here at like $20, you're thinking, man, is this a good time to sell? Well, I don't know, man. I can't blame you for taking some of it off the table. Maybe you sell a quarter of it, right? You bought 100 shares at 20, so you had like $2,000 into it, and now those 100 shares are worth $8,200. You sell out your original $2,000. You're playing with house money with $6,000, right? That doesn't feel so bad. Could you sell it all? Yeah, I mean, it depends on your position, your portfolio. Are you in it for the long term? Do you need to buy a house? You got a down payment that you got to come up with. I don't know your situation. You got to figure that out yourself. But my plan on AMD, right? Let's take a look here and see just what's going on with AMD, and we'll pull that up, right? This is going to be a tough decision, right? From the standpoint that this is now my largest position. This is my first single stock, six-figure position, and I didn't think it was going to happen this quick. I probably told you guys this thing could get to 250. This time last year, I probably said, yeah, we could get to like 200, 2.25. And it went above that, right? We were looking at the PEG ratios. We were looking at the PEs. We were looking at the growth metrics for AMD. We were talking about the MI400s, the MI450 chips. Well, all of it's coming to light now. And Intel is also telling us that they cannot keep up with demand. So this thing going to 347 now makes me really think 348.90 and after hours, after a 14% gain on Friday, what happens now, right? That is the $1 million question as to what we want to see, what we want to do with AMD, and really where we go from here. So if I'm looking at this long term, it gets tricky, right? Part of me wants to keep it. Part of me thinks, well, yeah, we just crossed $500 billion in market cap. We're at 567. But where do I think that this thing can go? If you give me 5 to 8 years on AMD, I think this can be $1,000 stock. Now, are there going to be some hiccups along the way? Yeah, that's for certain, right? There's always going to be those hiccups. There's going to be those ups and downs. But I also look at the opportunity cost of my money. So when I'm looking at this and having 296 shares. That is currently what I have. I made $12,000 on this position, and we're at 102. Oh, sorry, 12,000 on the day, $61,000 since beginning of last year. Right? So we're at 102 grand. Now I'm looking at this covered call that I wrote end of day on Friday, and I wrote it for a week out. Well, I wrote it at I think I got $489 to basically agree to sell my shares at $370 this coming Friday, May 1st. So I will sell 100 shares at $370 per share. That would be $37,000 of cash that goes into my pocket. Now, why? Why would I do that if I think it's going to go to 1,000? Well, part of me thinks this monumental run, where do we see this thing peak out? Where do we see this thing slow down? I look at it like we were at 230 3 weeks ago. Do we really need to be at 370 3 weeks later? I don't know that much has changed. I think a lot of the news has already been in there. And when I look at this a year ago and I'm saying, hey, buy this under 120 or whatever it might have been, and I also had that forecast of getting to 2.25, 250, I feel immensely greedy, not thinking about maybe taking some off the table at 370 when it just far exceeds where I'm at. It is also one of those markers that I look to keep a position under 10% for sure, normally like 5%. And this thing has crept up into that 10% kind of territory, which makes me a little bit nervous about how much exposure I have to AMD. So part of me thinks, one, it's run up too high. If it gets to 370, okay, I'll sell some. You're going to force me to buy some dividend stocks with this cash. Or the other side of it is, if we have too much growth, if we have a periods of rapid inflation with rising oil, which we've already got oil, we've got some rising inflation. Then if we have stagflation, it's going to bring the market down. We could potentially have a 10 to 15% correction, crash, whatever you want to call it. So that would be a good time to buy back into some of these positions or, put some money elsewhere. And I'm looking at that. How can we build out an AI portfolio? Yes. So, AMD's done really, really well. I don't want to be super greedy. So if it goes up to 370, that is going to be where I'm going to take some profits. Now, if it goes above 375 to 380, I do believe that we can get into the 400s comfortably. And I think that's not all that much of a stretch. I think that this can be a $400+ stock in short order. It could be in the next month. It's not that far from where we're at. We're probably going to have to get some other price target adjustments. We're going to have to see a lot of people coming out. We've got a forward PE of a 45, but we're probably still in a realistic buy territory on a price to earnings divided by the growth multiple going forward. 5-year return at 270%. We've got, when we go on down here, we've got a couple downgrades in the last 120 days. We've also now passed our mean for our price targets from 47 different analysts. We were looking at this like a month and a half ago, and we had 30 or 40% of upside. So we haven't caught up to what the analysts are saying. The analysts, if now they come out and say, yeah, never mind, this is now going to 550, you're going to see more buying action, but we're not there yet. So that could happen Monday morning. That could happen overnight. I'm not too sure where that goes from here, but that is a potential problem with entering a covered call position on a Friday evening. Most people probably wouldn't do that. We'd probably wait for a Monday, see what shakes out over the weekend. But I looked at it like, I can get a $500 check for agreeing to sell my shares for $22 higher than where they currently are. And they just went up 40% in, 3 weeks? So that's where my head's at. We still have annual revenue set to grow to 35% for this year, 95% by the end of next year. We've got no dividend to speak of. We've got forward PEs at a 36% premium, which is scary, right? We're worried about that, but we're also in a boom cycle of AI, and I don't think that we can go by a 5-year average to figure out what the next 5 years is always going to be as far as what our PE should be. So that's when we come down to the PEG ratios and we see what is the actual growth, right? We see this growth. Yeah, we've got this PE that is at a, 45? Yeah, 45. But then on the growth side of things, our growth numbers have to be about the same to get it to divide out to be 1, right? And normally we're willing to pay more on a forward PEG ratio metric at a 1.6, meaning that PEG ratio could go up to like a 60 and still be at that 5-year average price to earnings divided by growth. So this says that we could still buy it. Price to sales is high, but that is pretty much in line with the fact that the price has already gone up, speculative to what the sales are going to potentially bring in on CPUs and GPUs. And you got to factor in 400 and 450 chips coming out. So there is a lot to digest here. But the big thing for me was the position was getting a little too large. I felt a little too greedy. So if it does keep going up, I'm going to keep writing covered calls. And if I can get $500 a week to write a covered call, I'm going to continue to do that, right? That's easy money. That is easy money. And if it, keeps going up and I keep bumping it up another $20 and I'm still getting $400 or $500 per week in order to write a covered call on a position that I wouldn't mind trimming, okay, twist my arm. I'll take the $500. That's just what it is. So there's a lot of different things at play here. But at the end of the day, I really want to take a look. Where can we go, right? If we really do get stagflation and we get a market crash, well, where do we want to be? Well, it's not going to be in oil, because if we're not going anywhere, we don't have jobs, we're not traveling. Well, oil is going to be cyclical, right? We can't expect oil stocks to run if oil drops back down to the 60s or the 40s or however low it could go if things go really poorly. So buying oil is a cyclical game. You can be in something like a CVX, which I'm in, but at some point, something that has gone up, right? We're going to look at this year to date. We did have this spike, right? We saw this thing get to 207. That's around the time when Iran started being a problem. Fuel or oil prices went through the roof, and then oil prices kind of came back down, but gas prices are still elevated. So again, we're getting some sort of stagflation with, the fact that inflation is rising, oil prices are rising. But is the economic output going to keep up with the prices of oil? Are we going to be able to keep paying people? Are UPS trucks going to be loaded? Or, whatever it is. Are they going to be delivering things if people can't afford them? So, yes, it went up. Do I see this thing being a long-term $10 or 10% gainer yearly? No. I mean, you look at the 5-year. We kind of just ride this line. Are we getting 3.8% dividend yield? Yeah, we are. But we can do that in a lot of spots. So I do have some CVX, but if you're in just for the dividend, you could look at something like an Realty Income. You're getting 5%, and it's also kind of riding that line, right? It doesn't really get too far above it, too far below it, but you're getting 5%. So it's a fairly safe way to make 5% in dividends. Now, I want to look at this potential crash, recession, whatever this might be, if it does happen, as a time to buy. So if I have that money on the sidelines, I can deploy it to other places that I think are going to be generational wealth builders. All right. So what does that mean? Where do we see generational wealth being built right now? And that is in AI. That is one of the big spots that is just going to continue to grow. Is telecom? Yeah, telecom spikes when the market gets weak because people are after dividends. Yeah, we can see some people go into defensive names. We can see people get into some Lockheeds or things like that. But are they really going to be the growth drivers that are going to be generational wealth builders in 5 to 10 years? No, they're gonna grow. They're gonna do their thing. But it's a dog eat dog world out there. Can they run more efficiently? Can they run more lean? Can they get rid of some people? Can they sell product cheaper? There's always someone coming to eat their lunch. We see that in AT&T. That used to be the name that everyone had to have as a stock. And I mean, AT&T, if I look at a 5-year here, it got down there. It was pretty nasty and now it's up. But I mean, overall, it's not a huge growth story. And I mean, a lot of people thought that about Intel for a while too, but they kind of got out, they're now doing some better things. So software could be something like that. We could see Adobe start to rebound. Adobe, I mean, I really want this one to do better. I just keep looking at this thing like poke it with a stick and see if it's going to do anything. Like, come on. We were at 276 here. Sorry, I got my own pop-ups in my way. Back in 22, and then we had this big spike up to 6 something. And hey, now we're back down here at 245. I want this thing to start working, but people are worried that AI is going to beat Adobe. And that is one of the big problems. So what do we want to do? Well, data centers are obviously one of the big hot buttons right now. So if I go over here and I look at data centers, I'm going to share this tab instead, right? Data center, right? Amazon, Microsoft, Google, co-location leaders, Equinix, and Digital Realty, which is EQNX, I think. Equinix, EQIX, my fault. So over here, right? If we go ahead and share this one again, we're at 1108. It's got a small dividend. There's not much upside, right? There's a lot of people have already crowded into this trade. So we've only got about 0.19% of upside. And you can see it, right? If we look at this thing from the past 12 months, from the start of the year, we were down here at, call it 770. And now we're at 1108. Not really the time you want to buy. So yes, if this thing came back down into the 850 to 900 range, I can see it. But right now, it doesn't really look like a screaming buy. Even on the high side, you've only got about 12% of upside. So that doesn't really light any fires under me to say, yeah, I got to scream and buy here. Digital Realty, about the same, right? We're at about 6.5% of upside, 17.5% on the high side, -5 on the low side. So comfortable, but not doing anything too crazy. Now, Amazon, I've been pushing Amazon for a long time. I still think that it's got a lot of room to run. I would feel better personally having Amazon rather than just simply one single stock that I don't follow Digital Realty or Equinix well enough to really know what they're about. But I'm trying to think outside the box here. What is the generational wealth opportunities right now? Data centers, they do that for me. I'm looking at those, right? So Amazon might not be a screaming buy either. There is more on the downside there. I like where they're at. I still really like Google, but Google already really ran also, right? If we go back about a year, when I was saying to buy this thing in 25 in the mid 150 range, and then I said, yeah, we can get to 2. I think we can get to 2.25. And then we just kind of kept going, right? So there's a lot of different things there. When people were looking at Google saying AI and ChatGPT is going to destroy them, they're going to destroy search. And then Gemini came out, and then, now Gemini's taken over. Well, they're still in data centers. They're still in AI. They're still in a lot of the different areas where I think there is generational wealth to be built. So we get away from data center, right? We see the names, we see the big, Mag 7 names, we see some other ones, we see some different, landowners that can do some different things there as well. You think Prologis or any of the other warehouse buildings, Prologis, PLD, they probably got some ties to data center. Why can't I think of the name of them? They shred paper. They're also more into data centers now. It's going to bother me. I'll come back to that one. Someone in watching this is like, you know what it is, dummy. I know that you guys are already thinking of it for me. It's driving me nuts. Well, all right. So we've got a lot of different companies that are going to be opening data centers. but then we're combating the problem of energy, right? Energy is the next big thing that is going to be a problem. So I've been watching Constellation. I can't say that I really have a position here, but Constellation Energy makes a lot of sense to me. And not just your typical utilities, but the ones that are really looking to have these standalone type on-site generation or generators, things that make power on-site. So I'm looking at like a Constellation, you got around 20% of upside. Looking at Bloom Energy that does on-site energy really well. They've already run up too much. You're at minus 25%, but I really think that Bloom Energy could be a solid pick. SMR, I still think that modular nuclear could be a strong area going forward. You got 41% of upside. Some people are steering away from the fact of nuclear, but I do believe that some of these are going to work in some new capacity rather than maybe what we thought nuclear energy was going to be in the past. So that is another way to play this market. The energy to run these data centers. NextEra, I still like NextEra. They've been doing really, really well. Also, for a utility company, we're looking at a company that was in the low 70s in September, and now we're in the 99 range. 95 range. But that gives us a real nice return on a utility stock that's going to pay us a dividend. They had a compound annual growth rate in the mid-teens. So better than a lot of other utility companies. You get about a 2.5% starting dividend yield here. It's comfortable, right? Do I think that it's going to set the world on fire? No, I don't think that it's going to be the stock that's going to make you millions of dollars every night. But I'm looking at stocks that we could potentially buy to build wealth long term if we get a correction. And I think these are going to be some of those names. Then going forward, chip makers. I still really like Micron, and it's one of the only ones that is American owned. Samsung's out there. We've got ASML. We've got a lot of other names, but Micron is going to be one of the big ones that is going to be making these U.S. owned, right? So I think that Micron. And I mean, we've already seen this one run also, guys. I mean, this time last year when I was saying to buy this in May at 85, and people were like, these stocks, they don't get out of their own way. Their PEs are always super low because it's just a commodity chip maker. Until we all decide that we need those commodity chips and we send this thing to the moon. This thing was a moon play. It really was. $85 up to where are we now? 496. Yeah, that's the median, right? Or the average, right? We're looking at a median price target of 543, still with upside up to around 700 on the high end, and I think we can get there as well. So we're looking at energy, we're looking at production, we're looking at data centers, we're looking at people that are running those large language models. There's a lot of different ways to play this, but I think that gives you a reason to dive in a little bit more. Meta and Amazon, they are having an agreement for Meta to buy Amazon chips, right? I forget what chips it was. I just saw the article, but Meta and Amazon are partnering, and they're going to be buying a lot of those chips. Meta's also breaking ground on a data center in Tulsa, Oklahoma. You got around 27% of upside, guys. Like, that's a great name. I said in the fives, this was a great buy. This is a rougher chart, but yeah, we had this big pullback. It's probably around here where I was saying under 600, this was a buy. And then we got up to around 7.25. I was like, yeah, I think we can get to 8. And I still think that we can get to 8. And, to buy this thing, realizing that we could have bought this a month ago for like 530, and we're at 670 675. Man, that could have been a good play too. There's a lot of stocks that really traded down beginning of this year that shouldn't have been that cheap, and a lot of people were just running for cover and trying to dodge shrapnel everywhere, and they probably could have been buying some of these great names at a discount. So we're buying quality. I don't necessarily just want to chase some of these, so-and-so.ai. I don't want to do that. That is not the way that we get rich. That is a roller coaster ride. I don't want to just be on a roller coaster ride every day. I want to buy quality companies that can return for at least 3 to 10 years, right? That is where I'm looking to buy stocks. That is where I want to be. Now, does that mean I won't take some speculative money and throw it at so-and-so.ai? No, I sometimes see shiny objects and I want to pick them up too, right? It does happen. But if you have a core of your money in non-speculative investments, you're going to be safer and better for the long term. So that's what I'm looking at, guys. I'm really looking at a lot of different things. I want to get more back into Bitcoin after that whole Bitcoin scam. And I got taken out of, a solid chunk of money, a lot of my Bitcoin. Um, you guys can go back and watch that one. I don't need to rehash that whole thing. I did buy some more this week. We were buying Netflix for the investment challenge or investing challenge. It still hasn't bounced back. We haven't seen that one come back yet. I still like it. I'm not buying it again right now. We had Elliott Hill just come out and buy another $1 million chunk of Nike stock, right? He's the CEO of Nike. If I go down to insider buys, we should have another one. No, this was 2 weeks ago. I just saw this article that another. Oh no, he's got two here. My fault. We've got one on 413, another one on 413. Did he buy the same amount on the same day? That's confusing. I'm pretty certain that he bought 2 million dollars worth of Nike stock, and that is a big bet on this thing taking off. Now, I'm seeing some people saying, we a new generation doesn't want Nike, blah, blah, blah. I do think at some point this starts to turn around. They were in their own way, go woke, go broke. You had a lot of direct to consumer kind of flopping. We had a lot of different things they were getting in our own way. They were kind of falling behind and just re-releasing old shoes. And that was kind of felt like the way that they were taking the company forward was basically just replaying the past, trying to get back to what they were. And now we need to see them do something, right? So it's definitely a show me what you got, Nike. We really want to see that. But I do think that they can get out of their own way, start, going back to some of their roots, having new designs that people want to buy, and kind of getting that younger market back in place. So I still really like them. We got around 36% of upside. I really like SoFi. We talked about this last time. We bought Netflix. Number 2 was going to be Celsius. Number 3 was going to be Nike. Number 4 was going to be SoFi. And number 5 was going to be Microsoft. SoFi's got around 26%. We've got Celsius probably still around the same. They've really moved too much, 93% upside. I'm just going to go ahead and say we're buying Celsius this week. It's one that I really wanted to add some more of. I think this is a good position to add it. We got 93% of upside, 145 in the top end. Even the low end, we have a nice 27% gain if these analysts are right. But again, I don't necessarily like to just go after what so-and-so analyst said. We do our own research, right? So this is a buy. We're looking at, this is Refinitiv or LSEG. We've got a growing company that is got a lot of different things going for them. It's not necessarily tied to tech. It's not tied to really consumer staples. I mean, it's kind of in its own energy drink category. It's kind of a staple. You don't necessarily have to have an energy drink, but 90% of upside on price target. We've got, and if it does hit a recession, this could tank because it isn't a consumer staple per se. Annual revenue, 33% this year, 47% for next year. We've got, let me get down to some of the numbers I want to see here. Keurig Dr. Pepper's doing good. We got a 70% discount on forward PE, and the growth should be pretty solid. So when we're looking at the growth rate, the forward peg, it's at a 0.8. And they historically trade at a 2.7. Everyone else in the drink category is at a 1.7. So they're still about half of what the other stocks in the drink category trade for. You're probably getting a great entry point if they can execute, if we can dodge a lot of problems with, recession, with any kind of crash. I am cautiously optimistic about what the market can bring us with new Fed rates coming down, some different things out there that could point to things opening back up. If rates come down, the market is going to react to that in a positive way. Now, we have to make sure that we don't get into stagflation. We don't want to see a market huge correction or collapse before that, although it could be a solid buying opportunity for us with cash on the side. So if you've got some cash on the side, be ready for it. Know that if things go really south, we want to have some a playlist in place in order to make some smart moves when these things happen. We don't do that by scrambling and say the market's going to collapse on May 15th, and we know that. Like, we want to have a plan ahead of time, right? I don't want to wait simply till May 15th to come up with what I might do if the market goes south. I'm telling you what I want to buy. I know where I want to be. Do I want to up my dividends at the same time? Yeah, I'd be fine with upping my dividends, but where does that put me? Do I want to be buying, a consumer staple? Do we want to be buying telecom? Do I necessarily want to in defensive names? Not necessarily, right? Like, will I add to those positions? Possibly. But the other stocks that I just mentioned are really the ones where I want to focus. I want to be very deliberate and deploy capital into those names when Meta goes on that cut and they get down to 5.25 from 670 or 700. Do I want to be buying AMD under 125? Yeah, and if you had a crystal ball, you would have done that. But sometimes all we have is the homework that we do, the due diligence that we can report, the things that we can find. And we've got to be wise enough to make those buys when the market is just staring us down, saying, hey, here's a gift. You want to take it? It's like dangling that carrot in front of you and just like tempting you. And you feel like things are just going to continue to go poorly. So have a plan, stick to your plan. Know that the homework that you're doing is right. And if you need a little bit of help, feel free to reach out in the group, right? We're on Facebook, Let It Grow Investing. You can find us on that page. The links are in the description. Feel free to reach out. Feel free to ask. Is my crystal ball always right? No, but I'm trying to go by all the homework that we do here, and I'm trying to help you guys. There's no cost. There's no fees. There's no paywall to hide behind. We're just a group of investors that want to, see each other do well. So that's all I got for you guys. Now, if you could like, subscribe, and share, I would definitely appreciate that. It does boost up the podcast. If you need help getting started, I have links in the description for different brokerages, whether it be E-Trade or Webull, crypto.com or Binance. And there's some other things in there that I kind of do for myself as well that I'm an ambassador for, things of that nature. So I definitely appreciate that. Thank you guys very much for stopping by. I will catch you in the next one. Happy investing and be safe out there. All right, take care.